This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The U.S. Interior Department on Friday said it would begin taking public input for a new 5-year offshore oil and gas leasing program that could include new zones in the Arctic and elsewhere to maximize energy development. President Donald Trump has ordered government agencies to identify ways to increase already record high U.S. oil and gas production, arguing past administrations had unnecessarily curtailed drilling to combat climate change. He had also repealed former President Joe Biden's efforts to block oil drilling in the Arctic and along large areas off the U.S. Atlantic and Pacific coasts.
Results next week will likely provide a peek into how the world's top 3 oilfield services companies are navigating the uncertainty fueled by the on-again, off-again U.S. tariffs, as well as a recent slide in oil prices. President Donald Trump promised to increase U.S. oil and gas production, campaigning on the motto of "drill baby drill," but his expansive levies have fueled a global trade war and stoked concerns of demand destruction. Brent crude, which was trading at $80.15 a barrel when Trump assumed office on January 20, is currently hovering at $66.65 a barrel, rebounding from as low as $58.40 on April 9. Higher crude output promised by the OPEC Plus has also compressed the prices.
Moving on to the top news in the energy sector.
The U.S. power system is on track to hit a new energy transition milestone in April as total clean electricity supplies approach their annual peak while overall electricity demand eases during the so-called spring shoulder season. Clean power sources generated more than half of all U.S. electricity supplies for the first time in March, accounting for 51% of all utility-scale electricity output that month, according to data from energy think tank Ember. But this month clean power could notch up an even larger share of the U.S. electricity mix if overall power use declines in line with normal seasonal trends to allow utilities to cut output from fossil fuel plants just as renewable output rises.
India is planning to ease its nuclear liability laws to cap accident-related penalties on equipment suppliers, 3 government sources said, in a move mainly to attract U.S. firms that have been holding back due to the risk of unlimited exposure. The proposal by Prime Minister Narendra Modi's government is the latest step to expand nuclear power production capacity by 12 times to 100 gigawatts by 2047 as well as provide a fillip to India in trade and tariff negotiations with the U.S. A draft law prepared by the Department of Atomic Energy removes a key clause in the Civil Nuclear Liability Damage Act of 2010 that exposes suppliers to unlimited liability for accidents, the 3 sources said. Next, we have the top news in metal markets. Kyiv said on Friday it aims to complete talks by the end of next week about a deal with Washington on jointly exploiting Ukrainian mineral resources, an agreement Ukrainian officials hope will go some way to firming up softening U.S. support for them in their war with Russia. Though the terms of the eventual deal are not finalized, Washington has signaled it expects to have privileged access to Ukraine's natural resources by way of repayment for U.S. military support for the country over the past 3 years. Late on Thursday, the U.S. and Ukrainian governments signed a memorandum of intent, signaling their intent to finalize the minerals deal.
Iron ore futures slipped on Friday and were headed for a second weekly loss weighed down by the lingering Sino-US trade tensions, but resilient demand, upbeat economic data and hopes of more stimulus from top consumer China cushioned the fall. The most traded September iron ore contract on China's Dalian Commodity Exchange B dropped 1.76% to 699 yuan, $95.80, a metric ton, its lowest since April 11. It registered a weekly drop of 0.7%. The benchmark May iron ore on the Singapore Exchange fell 0.88% to $96.95 a ton as of 07:06 GMT, posting a 0.2% decline so far this week.
We will now look at the top news in the agricultural sector.
Chicago Mercantile Exchange cattle futures gained ground on Thursday as stronger beef exports, a weak dollar and position squaring ahead of the long Easter weekend pushed prices higher, analysts said. Hog futures chopped up and down and ended slightly higher, though relatively weak pork exports provided little support for prices. CME June live cattle futures settled up 2 cents to 204.075 cents per pound, and May feeder cattle futures ended 2.45 cents higher to 286.85 cents per pound.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.